Okay, hi everyone. It is Friday, the 22nd of May. I wanted to do a quick overview of, I guess, where the market is right now, and a little bit looking into the future, what we could expect over the next week, maybe longer. So the markets have been fantastic. If you are long over the past, looking at the chart, over the last, let's say, few weeks, we've seen a decent rally, particularly within the Nasdaq, where we've hit this kind of resistance on the SPX, on the S&P 500, but everything else has been going quite well. The question is, how much longer can this really continue? We have some competing forces. So what you will have noticed is that a lot of the markets are down today. There is some news out of the East about Hong Kong and China trying to enforce some restrictions on Hong Kong, and the concern here is that we could see another uprising from Hong Kong, which obviously disrupts business across the East. On top of this, of course, we've seen, and sorry, another article here. On top of this, of course, we've seen a kind of a Cold War developing between, well, maybe not so cold, between the US and China. There are concerns about that beyond the Hong Kong Chinese conflict. There have been numerous articles about how the US might push for certain Hong Kong Chinese headquartered businesses to delist from the exchanges. Just so everyone knows, even if they did delist, that doesn't mean that they disappear from the stock market, although it might mean, of course, less liquidity for those, because when people buy indexes, they obviously buy all the underlying stocks, so we could see prices drop in the stocks. Baidu is a company that has proposed that it might delist itself, so it is a little concerning because we're seeing an escalation of egos, and when things get emotional, it tends to be bad for the investor, albeit it could be a short-term, medium-term issue. The reason that I think that the US is pushing this narrative at the moment is that Trump is trying to deflect any negative news about him and trying to pass the buck effectively, or to create noises in other areas ahead of the election later in the year. So we need to keep an eye on what's happening in those two areas. I have trimmed positions in Alibaba and Baidu this week in profit, although I might be willing to take some of them out of the market even if they're in the red, just if the narratives in those two categories degrades over the next week or so. We can see things today are looking to open mostly in the red. It's not looking fantastic, but something to bear in mind is that we've had quite a nice rally. We are going into a 3-day weekend for the US and the UK. The markets, investors tend to take risk. They talk about taking risk off the table, or sentiment being risk on. So they tend to take risk off the table, which means they sell assets like stocks and indexes going into the weekend, particularly in volatile times. So it's very difficult right now to anticipate what news might come over the weekend that could cause big moves in stocks. So people sell their stocks and wait it out until they can trade again. These aren't all of the stocks in the world. These are just some that I follow. Maybe that's less useful than this. So we can see that we're also coming towards the end of earnings season. This is an earnings calendar. I'll be watching closely for the Alibaba earnings today, and then through next week you see we do have some earnings, but they're definitely slowing down, and by early June it will be the official end of earnings season. Now what we often see is that as we approach the end of earnings season, if it's been a good season, there'll be a sell-off for consolidation. People have made a lot of money and they'll want to take some profits from from the money that they've made. Usually as you approach summer, there's also a bit of a sell-off because people are taking holidays, liquidity decreases, there's less trading, so people get out of the market, take some profits, spend it, wait till the liquidity increases. Not sure how that's going to work this year. As the sun comes out, people do tend to spend more time outside, and things are opening up, but I'm not relying on that as much as I would in the typical in the typical years. So other interesting things that have happened: Nvidia reported earnings last night. Of course, you can read the summary of this, but it's always nice to go through the summary or the details of the earnings report. They had a pretty fantastic quarter. I won't go through every page in this deck, but the summary is pretty compelling. So this is the quarter-to-quarter view. Something to note is for some stocks like Nvidia, there is seasonality, so they do better in certain parts of the year. So you don't want to necessarily compare Q1 to Q4. So the quarter-on-quarter comparison probably doesn't make too much sense. But if you look on the Q1 2020 versus the Q1 that they've just reported on, you'll see a fantastic trend here. So obviously revenue is massively up, margin is also up. So gross margin being the amount of profit that they make. And if you look at the other lines, so net income also hugely up. So not only is the business becoming better, the business is becoming better quickly. There's a lot of growth in revenue, profitability, even things like operating income. So the stock has been on a bit of a tear through the past couple of weeks. I think people anticipated a good quarter. So it hasn't moved a lot on the beat. But also there is a bit of, as I said, a risk-off sentiment started yesterday and going on today that I think is muting any kind of rise in the markets. A few other things that I wanted to talk about whilst we're on the topic. So stocks in China people are viewing them as a bit more risky right now. An interesting company, pretty high risk, I would say, is here they are. I don't know how to pronounce it actually. Qudian. So Gideon is set to report next week. This is a company I noticed a while back. I found it in one of my I was alerted in my one of my stock screeners. It is an interesting company. I encourage you to look into it, but it is insanely high risk right now. If I jump out to my screener, effectively what the business does is they issue microloans. So, and a lot of their loans are issued, I think they're only issued on mobile devices. They operate in the Chinese markets. They are listed in the US. The things that make the company compelling are, gosh, I don't have it available here. Let me see if I can jump out to it. So I should have had a nice little chart open, but what you can see, for example, is that revenue has been increasing like crazy. They have hit a speed bump, and I'll talk about that in a moment. And also, if you look at their net income, so profitability, decent growth. Now the price has been trending down for quite some time. Let's say not a year exactly, slightly less than a year. And this is because if you earn a presentation that they shared earlier, I think this is from March. It's not in dollars, but the Chinese government changed the way that the regulations and the way that they allow companies to represent risk, and the amount of legislation over certain business types. So the concern with Qudian is that they are now carrying a lot more risk on their books than they were previously. So the risk being that because they are issuing loans to smaller companies, the delinquency rate, effectively the number of loans that might not be repayable, has increased significantly through this period. And you can see that that kind of matches the drop in share price. If people default and they absolutely have no means of repaying a loan, they've got no assets really, or insufficient assets to cover that loan, the company is going to have to take that as a knock on the chin. So that is more or less represented here. Now, although the company is quite high risk, you can tell that they have been able to run this business very successfully. They also have a decent cash position. So it's unclear what they're carrying on the books at the moment, but if their earnings are next week, and we'll be able to see a bit more clearly, but they've been carrying a decent cash position to ride this out and potentially deal with the delinquency whilst they change their operations to better handle that risk. And what is quite crazy at the moment is that their PE ratio, so the price per share versus the earnings per share, is about 1. And depending on the day that you catch this number, it can be less than 1, which means that the price that you would pay for the stock is less than the amount of profit that the company makes per stock. So given their growth trajectory and the value of the stock right now, the cheapness of the stock, I have taken a small position some time ago because I think there is a decent amount of risk, but it could pay off. And if it doesn't pay off, I don't think it'll hit the portfolio too much. All right. In the past week, I've also added to the basket of airlines that we own. I've chosen Wizz Air. The company is honestly very solid in terms of airlines. So Wizz Air is a low-cost airline. They are listed in London. I think they have been flying earlier. They started flying again earlier this month. But that's not all. The company has a huge amount of cash on hand to ride out any problems, such as the one that we currently find ourselves in. Their earnings growth has been decent. The PE ratio is fairly good. They are a nicely profitable company, even given that they are relatively young. And they have been the beneficiary of, they benefit from the crisis in a number of different ways. So they've operated a number of repatriation flights. They've also received additional cash, even though they were sitting on a cash pile, to help run their business. And their leader is incredibly bullish, and I think he's bullish because not just for marketing and sales reasons, but because the company is in an incredible position. So you can see that they expect to recover in 1 year versus other airlines thinking they're going to take 2 to 3 years to recover. They are going to grow their fleet, and unlike the likes of EasyJet, they don't have any PR or data disasters to deal with right now. So I could see them giving us a decent return over the next 12 months as they recover from the lockdowns that the virus created. All right, so I think that's probably it for me. So market update for the week that's just gone and the week that we see ahead. I do think that we might see the US indexes slip a bit more over the next week as people take a little bit more off the table, take some profit through this rally. I could be wrong on the timings, but I do expect that, at some point, people are going to look at this rally and say, I'm going to take something out of the market. All right, thank you. I'll try to do a similar video next week. Have a good long weekend.